Okay, so why are good money management skills so important? So it shows here that, we want to control our lives, right? We want independence and freedom to pursue what we want when we want. We want to be prepared and ready for the unexpected challenges life throws our way. The world has changed, right? We have the inflation going on. The prices of commodities are very high right now. We also want to develop self-discipline. We want to stick to our budget. We want to have a positive cash flow in our budget. We want to build our goals. If we want to buy a house, we have to save up early for down payment. We want to minimize stress, and also in terms of, if we want to become, let's say, a small business owner or entrepreneur, then there's a risk management that needs to be considered. Okay, reality check. In today's rental market, a Los Angeles resident would need to earn around $146,000 to afford a 2-bedroom market rate apartment. So if we look at the list here, we are number 3, and it's just renting an apartment. It's not even, if we want to own a house, right? So if we want to live in an affordable apartment, we have to move out of state, like let's say in Michigan or in Arizona. I mean, we can also move to Riverside. That's it's number 13 on the list. Okay, one moment. All right, another reason why we need good money management skill is we don't want us to be part of the statistics and for our next generation, right? So here, which is in 2023, it's a scorecard from Prosperity Now. 29.3% of Californian households has some or lots of difficulty paying for usual household expenses. 12.4% of California borrowers have severely delinquent debt. 5% of households in California are unbanked. What are unbanked? These are the people who don't have a checking or savings account with an insured institution or FDIC insured. And 14% of households in California are unbanked. So who are these people? These are the ones who have insufficient access to financial services. Okay, so tip number 1, we have to set SMART goals, right? So I know that in previous Lunch and Learn webinar, this has already been discussed, so we'll just go over it. Okay, so we always hear about SMART goals. We've been told to apply it when doing our homework at school or when we want to achieve something. So SMART is an acronym for specific, measurable, attainable, relevant, and important. Creating SMART goals can also be applied in attaining financial goals. So in an example here, let's say, like I just want to take a vacation to Italy this year, right? But we have to be specific. So yeah, so we save enough money to go to Italy. So it needs to be measurable. How much money do I need to achieve my goal? Right? We have to research how much to fly over there, what is the budget, things like that. We have to list it down. Is it attainable? So when we find out how much is the budget, is this doable? Can I actually reach it? It needs to be relevant. Is this something that I really want? Can I do it this year or next year? And then it should also be time bound. By what date must this goal be reached, right? So it needs a lot of research, So maybe I would check on when is the off peak to go to Italy so I can save money, and check for flights, right? And then research the budget and all that. So turn hopes and dreams into goals. So if my hopes and dreams is like I'd like to buy a new house, or I mean, sorry, a new television, then a strong goal would be, I'll save $400 and purchase new television in 6 months. So there's a specific amount and also the time that I will save that money. Or I want to get out of credit debt. Then a strong goal would be I will pay down $1,000 of my debt over the next 18 months. Okay, so there's a tool here that I want to share with you, and actually most of the activity sheets that I will show you are from CFPB Your Money, Your Goals Kit. So Sakina, my colleague here, will share that link to you. So the first activity worksheet is putting goals into action, right? So I don't know if you can see it, but there are columns here. And what to do is to break up your goal into small actionable steps, write each step in a separate box, and then consider what resources you will need to take each step and write them next to that step. And then think about sharing your progress with a friend or family member. Add their name next to the step and how often you will check in with them. This can help keep you motivated. So I know we do this, let's say when we want to lose weight, right? Like we want accountability, we want, we have a goal, and then we ask someone like our partners or friends to check on us. So it's the same thing with financial fitness or financial management, right? So we're just applying, what we learned from that aspect of losing weight to become financially fit. Okay, let's go to our tip number 2, which is utilizing a budget. All right, so heads up here. How much does it cost to live independently in Los Angeles? And this is an estimate of the expenses like renting, food, car payments, student loan, entertainment, clothing, and cell phone. The total per month is $4,276. Now, if we're earning LA County's minimum wage, which is 16.90 times 160 hours, if we have full time, then we're negative, right? It just sums up to $2,704. So minimum wage increases each year on July 1. So this coming July 1st, 2024, the minimum wage in LA County will be 17.27. And we also learn about the state's minimum wage for fast food employees that jumped to $20 an hour this April, giving many a raise of 25% from just last month. However, if you sum up, $20 times 160, I believe it's just around $3,200, which is still negative, right? We have a negative cash flow going on here. So what are the things that we can do to increase our cash flow? Okay, so we want to create a budget. So again, there's a worksheet here from your money or goals. To make it very simple, right? Creating a budget is just adding all of your income that's coming in and then adding your expenses, right? So we need to have a positive cash flow so we can still like save money or save something for emergency and things like that. So on this example, this person has two sources of income, which is the full-time job and then the side gig of $350, and the total monthly income is $3,150. However, the expenses are so high that the total expenses sum up to $3,185. So still negative, right? So other tips that we can consider is to track sources of income, right? So that person in the previous slide, when going over his or her budget, may not take into consideration some income that are coming in, like let's say um, that person is receiving child support or maybe a SNAP. What does SNAP means? Supplemental Nutrition Assistance Program from the government, or the TANF, which is a temporary assistance for needy families. Or what if that person is receiving the guaranteed income from the government? So you should take that into consideration and then include that in the budget. Okay, so we also need to track and analyze spending, right? Track your spending for at least a month, analyze your spending, and adjust your spending habits. So let's take a look at the example here. There's a section that says spending that cannot be cut. So what are the examples of that? For me, I think like utility bills, right? It's not something that cannot be cut, or maybe a budget for food in a month. However, we can minimize the bill, right? Like let's say using less electricity or using less water. We can do something about it. What are the spending that can be eliminated? If I would, let's say, for example, take a look at my bank statement, and I do see like several subscriptions over there that I don't use anymore. Like, let's say there's a gym membership, but I don't go to the gym anymore. So I want to remove that. Or let's say subscription to Disney or other channels that I don't, watch shows anymore. Scratch that out. I would have a juice subscription from Press that I don't order anymore. So I would remove those. And then finally, what are the spending that can be reduced? So an example would be going to Starbucks every day. Why not decrease it to like just going there once a week, make my own coffee, or maybe I usually go out, for eating like probably every day. So I want to minimize that and just go out and learn how to cook, things like that. All right. Paying bills and other expenses. So this is just like a quick reminder to everyone that, or all of us, that needs are the things you must have to live, right? Like our shelter, our clothing, food. Obligations include debts you owe and payments you've been ordered to make. And wants are the things you would like to have but can survive without. Okay, what are ways to cut expenses? I've put some, ways here. If there are any other ways you can think of, kindly share it in the chat. So first off is shop around and compare before buying something. Use coupons or apps that save you money. Get a bank account with low fees or no fees at all. Always pay bills on time, because if you pay bills late, then you have to pay overdraft, late fees, it will be more expensive. So we've talked about canceling subscriptions that we're not using and meal prep at home, and look for free entertainment options. Okay. So another way to be more organized is to use a bill calendar, right? It's important that we know the due dates of, let's say, our credit card bills, our utility bills, to avoid paying late payments. So do your bill due dates match the dates you receive your income? If not, try calling your utility company, credit cards, and others to request a change for your bill's due date to avoid late fees. Okay, so again, a quick reminder that to improve our monthly cash flow, we increase our source of cash, income, or other financial resources. and we decrease our spending or uses of cash and other financial resources, and we'll have a positive monthly cash flow. Okay, find ways to increase income and savings. So we have like one-time activity like holding a yard sale, selling items online, gig economy jobs, or claim tax credits. And we can also do regular activities. This is more of savings, make our savings automatic, change our tax withholding if we receive a large refund, or increase our contributions with every pay raise. Okay. And please, again, chime in the chat if you think of other ways to increase income and savings. All right. So now let's go to our poll question number 2. Okay, so if you can please check your poll on the right side of your screen. How do you plan for unexpected expenses? Do you have an emergency fund? Are you using credit card? Will you be tapping your savings account? Will you borrow from friends or family, or you don't have a plan at all? Okay, I'm giving you a few more seconds to answer this poll question. Okay, thank you so much. Let's close the poll now and let's see the results. Okay, so this is very good. A lot of us have emergency fund for unexpected expenses. Yeah, that's good news. Okay, so let's move on. Let's go to managing our debt. Okay, so here we'll focus on, what is in the news right now. A lot of students are having a hard time dealing with their student loan debt. So we want to make sure that the federal student loan, division, they have these programs that can help ease the burdens of student loan repayment. And these programs may lower your monthly payment, forgive your loans after a specified period of time, or help recover from default. So the first program is the SAVE plan. This is an income-driven repayment plan that calculates your monthly payment amount based on your income and family size. Borrowers on the revised pay-as-you-earn plan automatically get the benefits of the new SAVE plan. And then we have the PSLF plan. So for county employees and government employees, you may be eligible for PSLF program, which forgives the remaining balance on direct loans after 120 qualifying monthly payments under an accepted repayment plan. And finally, there's a Fresh Start program that is a one-time temporary program from the U.S. Department of Education that offers relief for borrowers with defaulted federal student loans. Okay. Strategies for paying off student loans more quickly. So, of course, like we can make extra payments, make bi-weekly payments, we can refinance, enroll in auto pay. So please chime in the chat again if you have other strategies on how to deal your student loans. Okay. If you have been sued on a student loan, please seek legal assistance. The Legal Aid Foundation of Los Angeles may be able to help you. And for the resources of this federal student loan debt programs, please go to studentaid.gov. So with every debts that we have, the only way to manage it, there are just two types of method. The first one is the debt snowball method, which is a strategy that you pay off bills in order of smallest to largest balance, regardless of interest rate. and the debt avalanche method, which is a strategy in which you pay off bills in order of highest interest rate, regardless of balance. All right, let's go to understand how credit works. Okay, so for those who don't know what credit is, it is a borrowed money that you use to purchase goods and services, but it is money that needs to be paid back and oftentimes with interest. So remove that idea that the money that we charge at credit card, it's not our money. Okay, we're borrowing it. A person receives credit from a credit grantor, such as banks, credit card companies, or lending companies. They will have to agree to pay back the amount spent plus applicable charges at an agreed upon time. Oftentimes, a person will receive a billing statement with a due date and minimum payment owed for the month. The interest rate varies depending on which lender provided the credit. Okay. All right, why is credit important? It is useful when emergencies arise, right? So we've talked about unexpected expenses. If you do not have cash on hand, it is helpful to put the expense on a credit line and pay it off. Credit cards can be more convenient than carrying cash, especially when you're purchasing highly valuable things such as TV or whatever, right? Like, it's convenient because if your wallet gets lost or stolen, you can freeze your card and receive a new one and dispute any charges that aren't yours. Versus if you lose cash, you're not going to get it back. Credit allows you to make big purchases, such as a house or a car, and pay them off over time. For example, if you have mortgage or an auto loan that you owe a balance on and provide payments. And then having a good credit history is important because your credit score can impact your ability to rent an apartment, buy a house, or get a job. A good credit score gives landlords, employers, or lenders the notion that you are reliable and give payments on time. Now, note that 47% of employers run a credit check on job applicants, and 1 in 10 people have been denied a job due to a bad credit report. If you use your credit correctly, it is a powerful tool to use. There are people who takes advantage of the point systems and they can travel in first class, right? How can they afford a $10,000 seat in the plane? It's because, they took advantage of their card. They just charge their cards with the expenses, whatever they have, and they earn points. So when you look to apply for a credit card, look into what perks that card has or the company can offer. And credit is neither good or bad. It just depends on how you manage your credit and your balances. So it is important, but there are also disadvantages. It is easy to overspend and buy things we can't afford because we justify making big purchases by saying that we will pay off the balance quickly. Most people don't pay off their balance every month, and they carry a balance, leading them to owe more than they originally borrowed due to interest rates that continue to add onto the balance every month. Late payments can hurt your credit score. If you are late or miss a payment, your credit score can drop points. Non-payment unsecured debt, such as car loans and mortgages, can lead to collections and wage garnishments. If you don't pay your debt, the creditor will be able to repossess your car or home. Non-payment can lead to foreclosure on residential loans. So if you know you're at risk at foreclosure, please contact dcba. As I've said previously, we have foreclosure prevention counselors that will be able to assist you. A large debt amount can lead some consumers to file for bankruptcy. Consumers file for bankruptcy when their debt is too big of a burden and exceeds 40% of their income, and they will have difficulty paying it down. It is important to seek advice from an attorney if you decide to file for bankruptcy. It is something that will impact your credit score and stay on your credit report for 7 to 10 years. So we're talking about credit reports. So what is a credit reporting agency? It is a company that collects information from various sources and provides consumer credit information on individual consumers for a variety of uses. So these are the three familiar credit bureaus in the US, the Equifax, TransUnion, and Experian. And we have samples of credit report here. The credit report contains your credit history as reported to the credit reporting agency by lenders who have extended credit to you. All three credit reports may contain the same information. The information in credit report depends on which credit reporting agency the lender chooses to report your information to. We strongly advise to please review your credit report at least once a year. Go to annualcreditreport.com or call them. It's free. I would usually check my credit report 3 times in a year, since I can individually check in Experian, in TransUnion, and in Equifax. So that's another way of checking your annual credit, credit reports. Instead of once, you can do 3 times. Okay, so what is a good credit score? Does anyone here have 800 plus credit score, which is exceptional, right? I'm not in this in this score. Most of us, I think, will be in the very good one rating, which is 740 to 799. All right, so we still get good interest rate if our credit scores are from 740 and above. If your credit score is 670 to 739, that is good, but you may be offered a higher interest rate. But if your credit scores are like 580 and below, expect that you will get a very high interest rate, or the lenders may not lend you money or whatever you're purchasing at all. Okay. All right, so use credit wisely and maintain a healthy score. Always make payments on time. So to calculate your FICO score, your payment history is like the bulk of their calculation, which is 35%. Have at least 3 active trade lines. So what are trade lines? They're just different types of credit accounts. So service credit, like paying your utility bills, that's being reported in credit bureaus. Installment credit, like if you have car, house, or boat. Revolving credits are our credit cards. And then there are also charge accounts, right? These are, if you have American Express charge card, you have to pay the total balance every month. So if you have at least 3 active trade lines, that's 10%, which is the credit mix. Maintain a mix of accounts. So if you have mortgage, an auto loan, and credit cards, you're good. Don't close old accounts unless you need to. 15% is the length of credit history to calculate the FICO score. Keep your balances below 30% of your credit limit, because that's another big bulk of calculating the FICO score, which is 30%. Limit hard inquiries, so that means don't open a lot of credit, because it will ding. Those companies will ding your, they'll do hard inquiry on your credit report, and it will deduct 10 to 20 points off of your credit score. And please think carefully before you co-sign. If you're a co-signer, your points will also get deducted, and you also have the same responsibility as the main borrower. Okay. How can your credit score impact you? So as you can see here, if you want to buy a car with a $20,000 worth, the lower your the lower your FICO score is, the lower your APR. APR stands for annual percentage rate. This is the annual rate charged for borrowing or earned through an investment. All right. Loan term is the same, but your monthly payment, take a look at this. The higher your credit score, the lower your monthly payment is, and the lower your total interest is being paid. So if you can see the difference, those who have very low credit score would have to pay like more than $4,000 of interest, which is, you know, ridiculous, I think. So please, we have to improve our credit score because of, you know, of what we see here. Okay. Please watch out for credit repair companies. So these are the warning signs. They tell you not to contact the credit reporting agencies. They will ask for an advance fee. They don't give you a contract. They don't explain to you your legal rights. They promise you a new credit identity, and they tell you you can remove information from your credit report even if it's accurate. So these are very expensive services. And when, let's say, you realize that you've been scammed, when you try to reach out to them, they're already gone. So please watch out for them. Okay, next. We use safe banking. All right. So what are banking features? Before opening an account, make a list of what is important to you. So consider the following. The account should have no monthly fees. I don't know if this one still exists. I think with credit unions, no minimum balance requirement, no limits on the number of transactions, online and mobile access, free ATM access, no cost for money orders, nearby ATM and branch locations. Okay, so why do we need a checking or savings account? You know, our money will be safer there. It helps with financial planning. Now banks have online features wherein, you know, they give you your expenses and your income in like a graph view, and then they also give you recommendations. So take advantage of it. It is cheaper. You can access, you have access to other financial products, and you're actually entering the financial mainstream, and it is convenient. So what is financial mainstream? You know, so these are these banks offers affordable financial products that safeguard our money, grow our assets, build our credit, and allow for easy access when we need it. By the way, most of the banks right now, even credit unions, they now let you see your free credit score, and also they would give you access to your credit report. So take advantage of that. So these institutions are FDIC regulated. So what is FDIC? It's Federal Deposit Insurance Corporation that protects the money depositors place in insured banks in the unlikely event of an insured bank failure. So the products that can help us build and protect wealth: checking accounts, savings, tax advantage, our 529s, our 401ks, credit lines, personal loans, car loans, and home loans. So what is the difference between banks and credit unions? So as you can see here, you know, banks, they're the big ones. They're owned by shareholders, they're for profit, and so on and so forth. Unlike with credit unions, it's owned by members, it's not for profit, but the savings account interest rates and the credit, savings account are higher, okay? Another thing also with credit unions, they have limited locations. It's not convenient, but with the banks, they have multiple locations. So, okay. Bank On. Bank On's goal is to ensure that everyone has access to a safe and affordable bank or credit union account. So these are the features. They have low monthly maintenance fees, no overdraft fees, no non-sufficient fees, no inactivity fees. I know you cannot see the list of banks here that are members of Bank On, but you can check the full list on our website on Center for Financial Empowerment page. So, and then it also tells you the feature of what they offer. Okay. Additional tips. So take advantage of using the direct deposit. protect your money by checking account statements regularly, and report banking errors immediately. Okay, now let's go to high cost loans. These are loan products that are high cost, typically include some or all of the following characteristics. The borrower's ability to repay is not necessarily considered. Default rates are high. There's a short repayment period, a relatively high annual percentage rate, and fees are charges that may exceed the cost of making the initial loan or providing service. Okay, so what are examples of these high cost loans? Check cashing, prepaid debit cards. What are those? Those are not linked to a bank or credit union account. So you load money in the card. Money orders, like a check, but more direct to pay a pre-specified amount of money. There's a fee to cash money order. Payday loans. These are short-term unsecured loan with high interest rates. Borrowers writes a post-dated check to the lender. Cash advances. So the 350 there is the fee to request for cash advance. Withdrawing cash against your credit card limit, advance fee, and high APR. Installment loan. These are pay the balance in installment, like personal loans, auto loans, unsecured personal loan. Car title loan. Borrowers can use their vehicle as collateral to the loan. A lien will be placed in the car title. And also, you have to surrender your car title to the lender. And then they'll only give it back to you when the loan is paid in full. Refund anticipation loan. These are tax refunds, a short-term loan. The borrower borrows against an unexpected tax refund for the duration it takes the tax authority to pay the refund, and the fees are very high. The buy here, pay here dealerships. These are dealers directly extend credit to purchases of cars. They have very high interest rates. Okay, this is just to show you an example of how payday loan, scam their customers, right? And usually you'll see payday loans in highest need areas, right? So when a borrower visits a payday lender, no credit check, right, or consideration of borrower's ability to repay a loan. The borrower gets a loan. So the median loan is $350 and fees range from $10 to $30 for each $100 borrowed. Borrower gives lender 14-day post-dated check. So let's say if I borrowed on May 1, then I'll pay, I'll give the payday loan a check that is post-dated for May 15, right? But the fees are getting higher, right? So the fee here is $52.50. And then in 14 days, if the borrower doesn't have the money, so let's say on May 15, I've exhausted all my paycheck and I want to renew my loan to that payday loan, it will cost me $52.50 to renew. However, that's a new loan again. So it will cost me $350 for that loan, which is, again, this is ridiculous, right? Okay, so please avoid payday loans. All right, so let's go to poll question number 3. Let me open this. So what do you think is the most important aspect of financial management now that we've covered, some topics? Will it be saving money? Shall we invest wisely? Do we have to reduce debt? Do we need to maintain a budget, or we have to increase income? All right, 10 seconds more. Okay, so let's close the poll now and let's see the result. Okay, so I'm showing here that maintaining a budget is the most important aspect of financial management. I mean, there are no right or wrong answer here, but I do agree with that, especially at this time with the inflation so high and everything, all the prices just went up. 99 cent store already closed. So I think, having a knowledge of budgeting is very important. And then everything follows through saving money. And then if we have enough money, we invest it. We have to manage our debt. And then we look for, something to increase our income. Thank you so much. Okay, now let's go to our next topic, which is protect yourself from identity theft. Okay. Okay, so these are, ways to safeguard our information. So again, I would like for you to chime in at the chat um, to share like other ways aside from what showing here. So for me, I think the most important is that carry only what you need in your wallet or purse, such as credit cards, debit cards, or checks. Please keep birth certificates, social security, and Medicare cards at home in a safe place. Do not print any of the following information on checks like social security number, telephone numbers, driver's license number. Never share account numbers over the phone unless you initiate the call. Monitor and report discrepancies immediately for bank and credit union account statements, online digital payment accounts, credit card billing statements, credit reports. Use credit cards to pay for online transactions. Credit cards have more consumer protections than debit cards and checks. Shred documents that contain personal and financial information. So there's a picture there. This include canceled checks, credit card statements, utility bills. Do not use the following for your passwords: your mother's maiden name, your date of birth, um, phone numbers, last 4 digits of your social security number. That's a no-no. Enroll in direct deposit for paychecks, pension checks, or government benefits. If you're receiving it via mail, it can quickly be stolen. If it's direct deposit, it's quick, convenient. It's also more reliable in the event of a disaster, the direct deposit. Protect incoming and outgoing mail by using a locked mailbox at home, and do not leave mail out for pickup. Okay. And then what's next? Okay, practice safety online. So aside from what we have here on the screen, be cautious of emails that contain attached files. Okay, that's number one. They may contain viruses, malware. Do not fill out forms in emails that ask for your personal information. Do not reply to unsolicited email or pop-up messages. Do not click on links in an unsolicited email. Go directly to business official website instead. If you receive an email claiming to be from a company you do business with, contact the business directly to verify if the email is genuine. Avoid sharing logins, passwords, and other personal information. Verify the sender's email address is the same as the company's official website address. Scammers often use similar looking email addresses to an official website address. So if you have other practice safety online that you know, please type it in the chat. Okay, and then beware of bogus emails and text messages. So as you can see here, if there's a questionable sender's address, if there's a sense of urgency that states like hurry, update, buy now, we know that's a scam, right? If they're using non-US dating format, if it's a threat, And if there's a link and URL in status bar that doesn't match. So please take note of that. Okay, so what to do when things get lost? We have to take action as soon as possible. So for lost or stolen ATM, credit, debit card, or bank account information, immediately notify your bank or credit union to stop paying and change your password. As soon as you report the loss of your ATM or debit card, federal law states you cannot be held liable for unauthorized transactions. For stolen Social Security number, immediately contact U.S. Social Security Administration. And then to report identity theft, immediately go to prison, file a police report, okay? And then create an identity theft report, contact Social Security Administration, place an initial fraud alert with credit bureaus, and place an extended fraud alert on your credit. Okay, so lastly, know where to go for help. Again, we're always putting it in. Please check our website, dcba.lacounty.gov. We do have a digital resource guide that is on our page at CFE. We're updating it right now, but if you need general tips on money management skills, including sample budget, you can check it out there. Vita, so if you haven't filed your taxes yet, or let's say if you have filed like for years, but you may be qualified for credits like earned income tax credit or child tax credit and things like that, please go to freetaxprepla.org and make an appointment. So again, freetaxprepla.org. If you make less than $60,000 annually, you may qualify for cashback through Cal AITC, Federal AITC, but only if you file. Okay. Again, most of the activity sheets that I shared with you are from Consumer Financial Protection Bureau. They do have income trackers, spending tracker, bill calendar, dealing with debt collectors and other financial advice. We would also like for you to check out getaheadla.org, where they feature financial counseling, debt management, housing assistance, free tax preparation, and anything that we learn here in money management webinar. So again, please follow us on social media, check our website, call us if you need anything in terms of consumer protection. Okay. And finally, if you're interested in meeting up a financial coach, please scan this QR code on the screen to schedule your one-on-one financial coaching session.